Bitcoin's secure because it has this massive, diversified, decentralized network of Bitcoin security data centers, which we call miners, but they're really driving up massive hash rate to secure the network. They are subsidized by a Bitcoin block reward, and they're also subsidized by transaction fees. The block rewards, for the most part, run out after the first 30 years of the network. Between 2009 and 2035, we will have mined 99% of the Bitcoin by 2035. So that's running down, but the transaction fees will grow and are growing over that period because there's a scarce amount of block space. You can maybe process 30,000 transactions an hour. And if you want to move your money or you want to do that transaction, that's a limit. You have to put a bid to get your transaction in the next block. People are going to bid high. If I want to move $1 billion, I'll bid a lot of money. If I need the transaction to take place, I'll bid it up. The more people in the network, the more demand for that transaction bandwidth. What would you pay to sell $10 million worth of real estate in New York City today? What? You might pay $1 million. You might pay $1 million in transaction fees. The transaction fee economy works just fine for real estate, right? There's no block reward for real estate. People don't just get a bunch of free real estate every 10 minutes for being in the real estate business. They all work on the basis of a commission. The same is true in the financial markets. So there'll be commissions and fees to trade. There's a very limited amount of transaction space. The fee will go from a few dollars a transaction to $30 a transaction to $300 a transaction to $3,000 to $30,000 to $300,000. And that being the case, there's no reason to think the mining ever stops.